Hello everyone, hope you're doing well. Welcome to another episode of Altcoin Thursdays. It's been a while, but I thought I'd bring the show back given the comments on the last Monday markets. So we do read your comments. Thank you for all the feedback, support, and leave a like on this video if you enjoy this series and want to see more of it. So as far as this episode goes, I want to make 2 points, or 3 rather. We'll talk about BTC as a quick update to see if we can get a decent directional bias. Then we'll talk about the state of the altcoin markets more generally, and then look at the ones that I've got in the Altcoin Thursdays watch list to the right there. So as far as BTC goes, there's still no clear bullish argument to be made, I think, because again, on the weekly time frame, it made a lower low close. So lowest close and then lower low. And as we discussed on Monday markets, it even came in and retested the underside of this and found resistance there. So nothing particularly bullish on the weekly yet. The daily time frame came close to providing some sort of mid-term bullish bias, which it would have done if it closed above this daily cluster. Again, the argument at that point, and I tweeted this chart, we talked about it on Monday markets, Don also has this, but the argument would have been, well, look, you had a poke below the lows, and then a reclaim of that same range. So failed breakdown into range low reclaim would have been a decent setup that would allow us to trade back inside this wider range, and whatever upside we could enjoy towards the midpoint and the range high would be captured by altcoins to some extent as well. At the moment, and again, this could change because the range low is still intact, as in the bottom of the cluster, but as far as sort of bullish reclaims, that hasn't happened yet. In fact, if you look at the daily close, it closed as a nice looking daily candle with a long tail, but right at resistance. So if we're looking for daily time frame evidence of that range low reclaim, the market came close, but no cigar. It's just not there yet. So until the market either reaches lower levels of support or at the very least reclaims the daily range high, it's hard to be risk on, I think, purely from a technical perspective. So that's BTC. And to be clear, the picture isn't terribly different on ETH either. It basically came in and it's still very much in this weekly failed breakout regime, and that hasn't been invalidated. And on the daily time frame, there was a similar attempt to trade through some of the old sort of breakdown areas, and the market just found resistance there instead. Okay, however you want to splice this up, similar range low retest, but no range low reclaim for the time being. And again, that can change, and if it does change during the course of this week, then I think that provides a window to flip bias, at least for a few days, as far as the daily is supportive, but that isn't the case at the moment. As far as altcoins go more broadly, it's still very sort of PvP, mercenary type of altcoin rotations. The rotations are short, they're cerebral, narratives aren't sticky, the pumps aren't sectoral. It's very sort of one-off, what's the hot coin of the day or even of the hour. Influencers tweeting, having really large market impact, and even those have been retracing a fair bit depending on the coin. There's kind of no rhyme or reason to it. And so again, in those types of cases, you want to be very technical with the market, get in at good levels, get out and not look for trends or swing trades, because I think at the moment there are no trends or swing trades that are available. So very sort of level to level traders market type of environment, I think. So with that in mind, with that context set as far as BTC and ETH and the market more broadly, I just kind of went through my watch list and looked at altcoins that were at relatively interesting levels. That's really the best that I can do given the broader backdrop. As a general point in terms of how I approach altcoins, to be completely candid, I'm very much a Bitcoin and ETH guy. I probably should trade more altcoins, it'd be good for me. But sort of Bitcoin and ETH are my bread and butter, and I'll only express altcoin views if I really like the setup and I've got a clear directional bias for BTC and ETH. And ideally, I like to play them to the long side as well if the market is facilitative of that. And given I don't have strong arguments for upside in BTC and ETH quite yet, the altcoin arguments, I'm not going to sort of counter trade that bias. So most of my trading is BTC and ETH. If I have a clear BTC and ETH bias, and then also there's a trending altcoin or sector or some sort of trade going on in alt world that's a bit of a screamer, then I will sort of try to align that with my BTC and ETH bias as far as possible. And rarely do I sort of counter trade it, unless again it's for a very short term trade. Okay. With that context set, let's look at a few of these charts. So Cardano is one of them. There isn't a ton to say on the weekly time frame. If we really zoom out, this thing has just been downtrending forever, right? Sort of massive downtrend. It looks like we had a bit of a bounce, and maybe this is even going to be sideways or trend continuation from here. So sort of mixed weekly time frame at best. In terms of weekly levels, if you wanted to, I suppose, cope or steelman the bullish argument, it would be that The market is still holding this recent range low at 36 cents, and so on the weekly time frame the market looks okay as long as that is the case. I would say on the weekly, if that breaks down and you get a close below, there are pretty clear targets as far as the market trading back towards this cluster, and then maybe even lower. Okay, and the thing is, there's a fair bit of room to capture there, 10-12% depending on the move and the setup, but so the weekly I think is sort of neutral at best. And I say neutral at best because while it's true that the market is holding the weekly range low, at the same time it did overshoot and fail to break out from the weekly range high. So that's the weekly range for Cardano, okay? And you could also just splice up a midpoint there if you wanted to for some additional context, which lands at around 38 cents. With that in mind, if we look on the daily time frame, we start to get a picture of confluence, which is, if you look at that 38 midpoint, it's also a really nice sort of daily broken support turned to resistance, whether you want to just use these lows or use the cluster as a whole or box out this type of area. I think that is a very sort of valid level of resistance. We know it has legs on the weekly, and it's a daily time frame sort of textbook support, breakdown, retest. Okay, so as long as below 38 cents, it looks a bit crap. You might be stuck in a bit of a narrow range between 36 and 38. But on the daily view, at least, especially for those shorter term oriented, I think rallies into 38 are going to be met with resistance given that weekly midpoint and that daily cluster. Obviously, if Bitcoin and ETH want to play ball and the market is risk on, you'd expect closes above 38 and for the market to push higher towards the range high. That's kind of why I chose a lot of these pairs. They are at decent inflection points where you can flip bias if you have to. But at the moment, with what's available, this looks like a rally into resistance until proven otherwise. And I think all the lower time frames complement that view as well. I get a lot of shit for sticking to the weekly and daily a lot of the time. But as you can see, if you know your weekly and daily time frames, if you go down on the intraday, it's fine to have an execution time frame, like the hourly or even the 5-minute, depending on your trading style, but finding new levels on those timeframes won't always yield radically different results. If you have your high timeframes in check, there's a really good chance that the low timeframes just show the same picture with more candles or will be complementary in that regard. So that big sort of broken support turned to resistance that we have on the daily, unsurprisingly also shows up on the 4-hour, and it's all around the same level. So if you want a weekly range, this is it, 36 to 40 cents, midpoint at 38, with some intraday and daily resistance coming in at 37-ish, and that's what the market is rallying into at the moment, okay? As far as Arbitrum goes, very much still stuck at the resistance level that we outlined in Technical Roundup, our free weekly newsletter, trletter.com for that. And the specific cluster that we chose to focus on at the time was this pre-breakout little consolidation, and that's where the market seems to be stuffed for the time being. If you wanted to make sort of tangential bullish arguments, you could say, well, look, the range low is still holding at the moment. I think that's viable, but this move here was quite a significant break in market structure. So until proven otherwise, I'm seeing the current leg as the retest of that. So if you want a bullish Arbitrum argument, I think, again, it has to come above the cluster high at 123, 124. That would be a fairly decent move, and then we can look for the pre-breakout consolidation and maybe even higher towards where the old range high came from. But for the time being, again, one of those charts that looks a bit bearish retesty for my liking, and a daily close back below sort of these 116 lows would probably cement, I think, the market trading towards here. So a similar picture to Cardano, really, where you've got some semblance of support on the higher time frames, but bigger picture, you have a breakdown and retest into resistance for the time being. Okay, hopefully that's clear. Lido is an interesting one. This one's been very volatile. Even though I just don't like this chart, really. It's kind of an eternal range, but a very choppy one at that. I mean, this entire consolidation, I'm not a huge fan of. We can try to break it down and find some half-decent levels. I don't think we're going to get them on the weekly. Personally, I think the weekly range was good for a while, but has largely served its purpose for the time being. And I think the weekly range that we had for some time was this one, which gave us a really nice range low bounce. Since then, you know, right here, you'd be diddling in the middle if you take this weekly view, so not super compelling. We know we like to do business at the extremities, and it seems like the straightforward one from range low to range midpoint and even extending beyond is done. So sort of playing around with this thing on lower timeframes already carries that inherent risk that the easy move could be more or less done. Now, if this thing is going to continue to show I don't even want to say relative strength because it's down more than most things, but that's after being up than most things as well. So a bit of a mixed bag. If we're looking at pivots for this thing, I think there's a decent one around $2, which again, round number meme isn't a coincidence. And I really think you can eyeball this because the general area that has my attention is, again, around $2. And structurally, I'm just talking about this big, support, breakdown, and looks like a reclaim. So if if the markets turn risk on and stuff that has done well continues to do well, this really should be able to form a higher low around $2 and not fail to flip this back into support. If you have a generally bearish view, I think that argument becomes cemented below $2 because at that point, as you know, I don't think double fake outs are particularly frequent. We've already had one fake out to the downside, so any more daily closes below there just probably pushes towards the lows at that point. Okay, so I think you've got like a bi-directional day trading-y pivot type of thing at around $2. It's probably the last area to look for a higher low bounce if the market is going to give one. If it doesn't, then I'm going to treat it as a double fake out setup and look for downside continuation on daily closes into the lows at the very least. Okay, so it's one of those one-line rules all type of structures for Lido. How exactly you want to, again, splice it up, use this lowest close as your anchor or this pre-breakdown cluster as your pivot, doesn't really matter because it's all in the same area around the same price point. Okay, Litecoin, Don closed his long, so this is going to zero. That's a joke somewhat. On the weekly time frame, I still think 100 generally is resistance. It's been tested a few fair times now, so maybe if the market pushes higher, it won't prove to be as much of an obstacle, but I think the weekly time frame really becomes viable on weekly closes through 100, and maybe the market manages it before the halving, maybe not. That seems to be getting a bit crowded, but just be aware that as it pushes closer to 100, it is pushing closer to resistance. I prefer to do business above there, or at least above and then back below, rather than straight into the level that's been tested a couple of times already. On the daily time frame, I mean, this is a nice move, but I think it did hit a decent level of resistance, specifically around this former range high at sort of 93, 94. And again, you had a consolidation here, the market broke out from it and then engulfed. You have resistance here and then resistance once again. So LTC, the relative risk reward of staying long into 100 isn't great because, again, we know that's weekly resistance, rather do business above than below. For the time being on the daily, sort of 93, 94-ish, I think is also a respectable level of resistance. And if you want a short-term trading range, I would take 94 as the range high and 85 odd as the range low there, at least the sort of nearby levels. If you want to get really anal with it, I'm sure you could come up with a viable midpoint for it at around the 89.90 handle. And if we go down to the intraday timeframes, you can see that view is broadly supported. Again, if you get your high timeframes right, your low timeframes will adjust as well. This is the range high, this is the range low, this is the overshoot we talked about, and the midpoint seems to be a decently, or at least a sufficiently price-sensitive level. Okay, so that's the Litecoin roadmap. Again, with a lot of these, just kind of going over eye test looking at them, looks like we had a lot of daily rallies into resistance, and I can't buy those. Especially I can't buy those if BTC and ETH aren't playing ball. Okay, so I think some caution is warranted. Again, full transparency, we don't love to talk about altcoin shorts on the channel because people just get too enamored with the idea, and if you like, it's very costly to start being short altcoins if you get it really wrong, because most people just pile in with leverage they don't know how to use, and then if the whole market turns into a sort of hot ball of correlated number go up, the average coin on Binance, just from the correlations and the short squeezes and everything else, is going to be up 10, 15, 20, 25%, and with the leverage some people are using, that just means they get blown out completely if their timing is bad. So your upside on shorts is obviously limited because can only go to zero, and even then that's not super likely. Whereas your upside in shorting, I think I said that correctly, is limited, whereas the upside in being long is in theory unlimited because you can make a lot more than on the short side. Okay, so just to kind of cater to the average user, I suppose, when we talk about altcoins on Technical Roundup, we prefer to look for long setups, and if we think the market looks shit, we'll just say, oh, well, be cautious / it's at resistance, because I think on average, if you take the average punter's crypto career, they're going to make more money and get liquidated less being long alts, ideally on spot, rather than shorting alts on leverage. I'm sure that sounds controversial, and nowadays in the crypto influencer space, it's very popular to kind of be shorting altcoins all the time, but we've all had our faces ripped off, especially on leverage by altcoins, especially if they get thin and the liquid, sort of 20-30% is pretty standard, and that can easily carry you out on futures if you're not careful. So that's kind of why we talk about it in this way. Okay, I'm sure you can come to your own deductions. As far as OP goes, this has been a very technical chart. I still think it's fairly rough looking, to be completely honest with you. If we look on the weekly time frame, the last weekly close was kind of important because we had this highest close range high for a while, and the market broke above it and seemingly made a new all-time high, but instead just got distributed for months and has since broken back below into the range, and that just looks rough. I think the picture would get invalidated if you get a weekly close back above wherever that is, which looks like 190-ish. That would start to look okay. You still have the obstacle of the market rallying into the pre-breakdown level at 210, 220, but generally speaking, you could at least start to make a bullish weekly argument with some semblance of invalidation that, hey, look, it dipped back below the range, didn't go lower, back above, and whatever that, that's your invalidation. And then for the swing, you're targeting towards the highs. That would be reasonable. But at the moment, it just closed below the range and then is rallying into resistance. And it didn't really test anything terribly compelling. Even if you start drawing sort of cope levels, like, okay, maybe it's this high, or maybe it's this highest close, any of those kind of deeper supports closer towards the mid-range haven't been tested. Even if we go from highest close to lowest close and get a midpoint from there, that didn't get tested either. So from the available evidence, it looks like we had a breakout, distribution, falls back inside the range, and until proven otherwise, a rally into 190 is a range high retest. Okay, so that's not a great look for the time being. And I think that's complemented on the daily time frame to some extent as well, where if you just kind of eye test this thing, going from this highest close into some of the supports as well, if you kind of take the liberty of drawing a zone, perhaps, you can see this is pretty much the same as the weekly time frame, where you have a long consolidation or a long range, right? Here, breakdown, and this looks like the retest. If you want to be bullish, I don't think it's here. It would be above, and when you get evidence of a reclaim. And the market trading above $2 would give you that weekly reclaim, and also then that becomes actionable on the daily, and all the time frames start to sort of cascade into one another. But for the time being, that argument isn't available, and it just looks like a retest of resistance, okay? Again, one of the reasons I'm reluctant to sort of make weekly altcoin videos is because the market can change rather quickly. So, for example, all of these, it's at resistance, bearish retest type of arguments, if BTC and ETH decide to go up, they basically, because the market is so correlated, they basically get invalidated, and these pivots turn from resistance to support. So you always need to have a useful, unless you're on very short time frames. In general, it still helps to have a useful understanding and directional bias for BTC and ETH, and sort of keeping up with all of this on a weekly show makes it slightly difficult. So again, I'm going to ask for your comments. With all the limitations that I set out, if you want Altcoin Thursdays, I'll continue doing them as long as this type of format is sufficient for you. And again, one thing I don't want to do is do the whole thing like, well, if it breaks above and holds, that's where you long. If it does this and then breaks down, that's where you short. If it does this, reclaims, then breaks back below, that's where you short. Like, I don't want to give you 10 different scenarios at one level because I think ultimately it just ends up being confusing. I think in general, highlighting the areas to do business and then pointing you towards, assessing how the market looks at the time of recording the video, and then pointing you towards the videos on the Cred channel, such as entry triggers and top-down approach to trading. I'd rather sort of teach that way and provide you with the resources to come to your own conclusions, rather than giving you lots of potential outcomes and the next week coming along and saying, well, look, I was right because the market moved and I said it might move. Okay. I can understand the appeal for that, but I mean, I personally don't trade like that a lot of the time. It's not like I have a level, right? I'm probably going a bit off topic here. It's not like I have a level and I say, well, look, this is a level, and if it breaks above it, I'm going to long. If it breaks below it, I'm going to short. If it breaks above it and then back below it, I'm going to short. If it breaks below it and then back above it, I'm going to long. Like, I personally don't trade like that. Most of the time, I'll have a dominant directional bias in which sort of a direction in which I think the market is more likely to go, and most of my trades will be oriented towards that directional bias. And if I'm wrong, I, just like a normal person, will just lose money and get stopped out. Okay, as much as I'd love for trading to be as straightforward as if I'm wrong, I flip and then make money that way, sometimes you just have to take risk and make bets, and you're wrong and you lose money. So that's why, for those asking about lower time frame stuff, etc., why I personally don't choose to bombard you with a million different scenarios, because while I completely agree that if-then type of logic is useful, I think if taken to an extreme, and I'm sure some of you have experienced this, you can leave a comment if you have, we all have, I think, it leaves you with paralysis analysis, or analysis paralysis, whichever way around it goes, where you've got a level, but you've got so many different scenarios and possible type of outcomes in mind that you can't actually trade the damn thing, okay? And I think having a dominant directional bias, and at least a preference as to which direction to trade the levels, can clear up a lot of issues you might be having around trade execution. With that tangent out of the way, final coin to talk about, RNDR, Render, or Reindeer, as it is in my headcanon, is the only coin up today, pretty much out of my entire watch list, as well as XRP, which is funny. I'm not going to talk about that because I don't have any good levels there. This thing's been going up a lot. I'm not sure, again, if the market's risk on, this relative strength is notable and you might look for continuation there. At the moment, there's no clear setup for me. On the weekly time frame, the market is sort of rallying into this former range low support turn resistance at 230-ish, 220, 230. So on the weekly, if you're sort of buying this, there's a risk that you're buying the weekly wick. So that's not a great starting point. On the daily time frame, it's sort of slightly better, but again, the fact that the weekly here makes it slightly uncomfortable. I think if you're looking to fade this, be aware that it is sort of, in terms of relative strength, the strongest one. But I would just look for evidence of a failed breakout from $2. However messily you want to delineate this range high, between $2 and $2.10 roughly, that's kind of where it all falls. You could make an argument that this is, okay, well, double fake outs didn't happen, so this is a precursor to continuation. I completely get that. I'd rather just leave this thing for the time being, and then if it breaks down below 2, that's when I think, okay, well, the weekly resistance we outlined is doing its job, the daily time frame is starting to cascade, and that makes sense to look for a reversal. And at that point, I think the targets are fairly self-evident. As a first trouble area, there's this double bottom here, which also lands on a former resistance level turned potentially support as well at around 160-ish. So from $2, if the daily fails to 160, seems like a reasonable objective to look for. And then from that point, we can always do more price action memes and have this as our new range and go from there. Okay, but I guess the bigger picture here is relative strength, good. The market's risk on, continuation there is probable. Weekly resistance, not good. Daily is mixed. I think it starts to look less mixed and starts to look bad below $2. Okay. I'm wondering if it's worth adding any commentary on lower time frames. The best I can come up with, purely in terms of just eyeballing levels, is $2.40 on the 4-hour. Doesn't seem like the worst level in the world. That was the initial sort of mini range high made. The market tried to push above it, failed, and is retesting it now. Again, medium conviction on that. I think the weekly and the daily are better, but I would just bear that one in mind. And if it starts to pull back from there, miraculously, I think your first trouble area is somewhere around this $2 range low, which we also know is a daily level, so that that should be on your charts nonetheless. That's all I've got. Hopefully this was a useful episode. I got a bit ranty there in the middle, or at least just wanted to add some context and clarity as to how I think it makes sense to look at altcoins and how I want to cover them on the channel. If that's acceptable to you, leave a comment and I will know whether to continue this show. If you want all the squiggly whatever random stuff, I probably won't do it. So yeah, that's it. Thank you for watching and see you tomorrow for Casual Friday. Goodbye.